All right.
Okay.
Remind
By the
me.
way, I don't know if you saw the comments in the QAV TikTok, but on one of them, the only comment we got so far is somebody said, that old lady's got a really deep voice. I assume they're talking about me.
Which one? Oh, could be me.
Oh, I got the longer hair and the headband on, so apparently I look like an old lady. That was hilarious. I like that. Okay. Welcome back to QAV, everybody. Tutte voi. This is QAV 603. We're recording Tuesday, the 17th of January. How are you, TK?
Very well. You stopped up my intro. I was going to say, hello, motherfuckers.
We try and keep this show clean, Tony.
True.
It's got a clean rating on the network. So yeah,
no, I apologize. So if we see
mother flippers, try
melon
that.
farmers.
Or melon farmers.
Yeah. I was referencing Dairy Girls that we were talking about.
I know, it's a great show. Well, it's been a good week in the markets, Tony.
It has.
Market was on a bit of Viagra last week. It was going up every day. It dipped a little bit this morning, but then last I looked, it sort of had recovered from that.
Mm-hmm. Yep.
I'm not sure if it's recovered all the way, but one of the no, it's still down. I think still down today by 0.21%, but not too bad. But one of the good things about that is, well, not good. One of the bad things is the STW benchmark has shot up in the last week, and it's making us look bad still. It's doing really well. But anyway.
In the short term, it's
short term.
It's just taken a slight lead. We're
That's
still coming around the turn.
More than a slight lead for this financial year. It's got a huge lead, but yes, we'll catch up. But before we get into the portfolio updates, let's talk about commodity updates, because I had some issues with that this morning. One of our astute listeners, pointed out to me that I had coking coal down as a Josephine, but that it might actually be a buy. And I shot you some emails. I think the chart I've been using was out of date. It was a September 22 chart that I had forgotten was not staying current. I'm using bar charts there. And when I looked at the January 23 coking coal chart, it actually looks like it's a buy again. You're using a different chart, I think. You were using trading?
Yeah, I'm using the one that's in the scorecard, which is trading economics.
It's not in my copy of the scorecard.
Okay. Well, hang on. Sorry. Let me just open up the scorecard. I am using bar chart as well. I'm just clicking on the link that's in the scorecard.
Okay, so when you click on that, if you look at the title, it says September 22, and that's where the price finishes.
Right.
But it's now January 23.
Oh, okay. Sorry. Yeah, gotcha.
So if
just for clarity, I was thinking of the normal coal chart, the thermal coal chart.
Yeah, right. So if you look at the coking coal chart in bar chart for January 23, its code is U7F23. It's definitely looks like it's above the second buy line, and it's picked up in the last couple of months, actually. November 22, it was down at 273. Now it's trading at around about $309.
Mm-hmm.
This is the Australian coking coal pricing. So I think coking coal is actually a buy.
Yeah, I think you're right.
So thank you to whoever pointed that out. Good work. Thank you for checking our work, as always.
So that means we're going to have to update this each month with a different link, aren't we?
Yes, and I've actually made a note of that now beside the chart in my thing, so I remember to do it. Most of our charts update them. You don't have to pull up a new one all the time, but this one, unfortunately, you have to do that. So coking coal, I can't exactly remember the coking coal companies, but I think
Stanmore and Coronado from memory.
Good old SMR, the one that I bought when I shouldn't have bought, but has done very well anyway, despite the fact that it was a Josephine at the time. So anyway, that's that. A few other changes on the commodity list this week. I think copper was a buy again. Is that exciting? Is that C6C? Is that our big copper stock?
C6C, it is, and Sandfire from memory too.
Yeah, right. I've actually I've got my little list of com stocks here. Let's see who else. 29 metals. I don't think that ever comes up on our buy list. What else? We've got Aeris Resources, Aurelia Metals are in copper. C6C is the big one. What else looks familiar down here? Helix Resources. I think they've been on the buy list before. Oz Minerals. And well, apparently Zimplats has some exposure to copper according to this list. We really don't treat them as a copper company.
No, we wouldn't be.
Anyway, so there you go. That's exciting. What else do we have in the com stats changes this week? Platins of Josephine, aluminium's a buy, and zinc is a buy.
Oh, well, zinc, I think, was also, is it South 32? It's one of their big metals, so that's good for them.
Right. Let's see. What have I got in terms of zinc? I've got what looks familiar here? Aurelia Metals.
Again, I think Aurelia is more gold than zinc, I would have thought.
Right. Okay.
Aurelia
Helix
could be
comes
gold
up on this
copper
list
from
as
memory.
well. Okay. Metals Australia, MLS, has some exposure to zinc, maybe. Oz Minerals again, obviously Rio Tinto. Yeah, S32. Sandfire Resources has some zinc exposure, apparently. Superior Lake Resources, which is, I thought that was SLR. This is SUP here, so I don't know about that. Maybe SLR or something else. Anyway, that's the only ones that really jump out at me as something we've seen before. And who else did I say? Aluminium?
CAA.
Yeah, Caprol, CAA, and South 32 has some aluminium exposure. 50% I've got noted here. I've got it down as 50% aluminium.
Yeah, from memory, it's got both bauxite and what they call alumina, which we call aluminium. So that should be good for them.
So if anyone's looking at any of those stocks, you can check those out. Portfolio updates. Well, I did my weekly report this morning. The dummy portfolio since inception, which for new listeners is the 2nd of September 2019, is up about 17.5% per annum. CAGR versus STW, the benchmark, which is up about 7.8% per annum over that period. So we're doing 2 and a bit times still. For the financial...
Sorry to interrupt, but that's why I don't get fussed about not being underperforming the STW for the financial year.
I know. It's fine. We're all cool. People do ask me to... Yes, people do ask me to report on the financial year numbers, though, because so they can see how they compare, how their portfolio compares to how we're doing. We're up about 8% for the financial year versus the STW, which is up about 20%. So it's having a corker year. Of course, it usually won't always stay that way, but that's how it's doing right now. Last 30 days, SMR is up 30%, CVL is up nearly 17%. LAU up 14.5%, BFG is up 10.5%, NCK is up 10%, and then there's a bunch of others. So good month for SMR, up 30%.
Well, and that makes sense if we just, as you pointed out, the coking coals just become a buy again.
Yeah,
turned up.
Thank you, SMR.
Yeah.
The light portfolios, well, I think last week when I mentioned the light portfolios, we were almost double the STW. Well, the STW caught up this week.
Oh, really?
Yeah, it's ahead of us
now
in terms of light as a group. The STW had a blitz a week, so it trumped us again. So, not by much, but it's ahead of us a bit again. What else have I got in my things to talk about? Collins Street, our friends at Collins Street Value Fund down in Melbourne. We've had him on the show a couple of times, I think.
Mm,
Michael Goldberg runs
mm,
the Collins Street Value Fund. Lovely guy, pretty much a value investor with his own,
very much.
twist of lemon on there. Yeah, like all them value investors, they do it their own way. But I got their quarterly report in the email the other day, had a look. For comparison, our DP December quarter for the end of 2022 was 7.26% per annum using CAGR. They're reporting for the December quarter 8.37%, but that's net returns. And I assume that just means you take your starting point and you take your end point and you calculate the difference. Is that what net returns means as a calculation?
Usually for funds managers, net returns means they've taken their fees out and any costs they've had as well.
Oh, right. But it doesn't tell me how they're calculating. Is this a CAGR calculation or is it?
Oh, it should be.
It
should be, but as we know, it could be weighted by time or weighted by funds invested or whatever.
Yeah.
Yeah.
Well, CAGR we're 7.26, but when I looked at like their starting balance and our ending balance, it's up about 8% over that December quarter. Their 12-month return they're reporting is negative 7.3%, 7.63%, sorry, negative 7.63%, while ours was plus 1%. So we're doing okay compared to the Collins Street folks, but not taking anything away from them. By the way, the rest of the numbers, 2 years annualized 7.7%, 3 years annualized 15.36%, which I think, 3 years is roughly the amount of time that the dummy portfolio's been running. And as I said before, it's about 17%. So a little bit better than that. Their annualized return since inception is 14.46%. They don't really say when that was, but their 5-year annualized is 14.09%. So they do good. We do a bit better, but they do okay.
Yeah.
That's all my list of things to talk about. TK, what's on your list?
Quite a few things, actually. So we have another question I saw come in late about the CEO transition. And this always seems to be an issue for people. When do we raise a red flag when the CEO leaves? And I wanted to come back to a question raised last week, I think it was last week, about Fortescue Metals Group and the fact that their CFO had just resigned unexpectedly and before their financial results come out next month. And I noticed I think it was in the Financial Review, that that's not the first senior finance person to leave Fortescue. Guy DeBell, who resigned as 2IC from the RBA, went across to work for Fortescue, has only lasted a number of months, and he's left as well. So there's something funny going on, I think, in the finance department of Fortescue Metals Group. Could be coincidence. Could be that the company's pivoting towards all its green new investments, and that's not working out for some of the finance staff. I don't know, but it's pretty close to a red flag, I think, when you see that happening. And as I said last week, I wouldn't sell the shares if I don't own them. I wouldn't sell them straight away. I'd watch what the market does, but I'd be getting out at the first sign of a downturn.
Well, it has had a bit of a downturn.
Okay.
On the 13th of January, so late last week, it was trading at $22.93. Actually got over $23 briefly. It's now trading at $21.91. So it's dropped by 10% in the last few days.
Yeah, well, I mean, everyone's situation is going to be different tax-wise, etc. But I'd be inclined to sit this one out and bench Fortescue until some more clarity, or until a bit of time goes past and the new CFO comes in and everything's hunky-dory again. But yeah, it's looking pretty strange when senior finance people leave quickly.
So you would sell it if you held it?
Yeah, I think so.
Right. Yeah, okay.
I'm red flagging it. And that's just, I'm being ultra conservative. It could be all good. But it's just, I mean, looking at it objectively, And I know they've come out and tried to paint a rosy picture on why people are leaving, but two senior people, one from outside in a senior role with the RBA last 6 months. And again, he's saying personal reasons for the reason why he's leaving. The current CFO saying personal reasons for the reasons why he's leaving. But it's an inconvenient time, to say the least, for Fortescue, and that to me raises questions.
Yeah. And everyone always has personal reasons. So
yeah. And I could be wrong. I'm being conservative. They could all be kosher and hunky-dory, and it could go on again. And also, too, the latest downturn in the price could also be for just iron ore underlying reasons. I know the Chinese are trying to put together a cartel across all of their buyers to get better prices out of Australian iron ore producers. So that could also be depressing the share price at the moment.
When the New South Wales Premier has to resign because of the photos of him wearing a Nazi uniform come out, no doubt it'll be personal reasons. That is why he has to leave. Nothing to do with the Nazi uniform.
Well, he better watch out for Al Pacino. And the hunters coming after him.
Yeah. I just wanted to know if he was at the same party that Prince Harry was at when he wore a Nazi uniform. Was it just like, privileged white men wear Nazi uniform day? Is that a thing that I missed out on? Well, I'm not privileged, so I don't get those invites.
They claim it's funny, and that's the sad part, isn't it? I mean, it's a difficult
I've got a pretty dark, twisted sense of humor, but even I can't find the humor really in that.
Well, and I also forgive 21-year-olds for mucking up. I mean, that's
sure.
I wouldn't want my 21-year-old self dragged out into the press at the moment, but because I would have made mistakes for sure, and everyone does. But it goes kind of one of two ways. He's 21, he's excited about his 21st party, and he makes a mistake. Okay, that's entirely plausible. Or, given his political persuasion, he's 21 and thinks, I'm going to stick it up those woke bastards. I'm going to be really out there and edgy and provocative. And he puts the Nazi uniform on.
I don't think woke was a thing when he turned 21, was it?
No, but
anti-liberalism
certainly was. So yeah,
right.
He's just trying to be provocative. So if it's the second one, and we'll never know which the answer is. If it's the second one, it's a problem. But if it's the first one, I'd gloss over it.
I like the fact that some senior ranking Liberal Party member down there started attacking the person that apparently was going to leak this story as a coward. It's like blame the leaker, not the person who did the thing that's being leaked. Attack the leaker. I think in the psychopath epidemic, I wrote about one of the symptoms of a psychopathic culture is when you attack the people that reveal the dirty things that are going on or the bad news. You attack the don't shoot the messenger. You shoot the messenger instead of
play the man,
not
the ball.
Yeah. So when you see them attacking those people, I'm like, okay, well, that says a lot about the culture of the New South Wales Liberal Party. But anyway,
and it was leaked by a New South Wales Liberal member anyway. So
supposedly, I don't think they know who it was yet, right? But that's the suggestion.
They haven't named the person who was threatening to release it, but it was actually released by a cabinet minister in the Liberal Party.
Oh, wow. So things are afoot.
Yeah, absolutely. It's coming into an election. There's a bit of jockeying going on, but it's a bad situation.
Yeah. Moving right along.
Yeah, so that was Fortescue Metals Group. Did the mortgage rate survey last week following on from the Reserve Bank cash rate rise. And I gave it a week or two, A, because it was Christmas, and B, because sometimes the banks don't pass on the rate rises straight away. And the bank's mortgage rates have risen. I get an average of 6.82, which I'm plugging into our spreadsheets now as our test to see whether the yield is above the mortgage rate. I say 6.82 without any sort of sense of confidence because the banks deliberately make it hard to compare their rates. So unless you sort of submit an application and they personalise a rate for you, it's pretty hard to compare. So I tried to take the standard variable home loan rate with a few standard features and use their comparison rate because they've got all sorts of discounts and rate changes for whether you have 80% equity, or sorry, 20% equity, or 30 or 10 or whatever, and what kind of other features you want, and whether you want a credit card with it, blah, blah, blah. So, and there's honeymoon rates going on there too. So look, it could be 6.5, it could be 6.8. It's in that sort of ballpark. So I've landed on 6.82 as the average.
And for new listeners, Tony, can you just explain again why it matters, what the mortgage rate is, why we use that in the checklist?
Yeah, we do it as we use it for a test to see whether the yield on a company is strong enough to pay off our mortgage if we happen to be borrowing funds to invest.
And why do we do that?
That's just a positive. So from my personal way of investing is I've always had a mortgage against my house, which I've then drawn down to invest in the share market. And it's a bonus if the company yield can pay off the mortgage for me. I mean, ideally, and we'll talk about this when we get into questions later on, the ideal situation, which we've been in before, is you buy a house, you mortgage it as much as you can, you draw that money down, you put it in the share market, you target QAV companies, but you target QAV companies with a strong yield, and then their dividends pay for your house mortgage. So you've got a free house. It's costing you nothing to live there. Plus, you've also got a lot of exposure to the share market. And even if you're just getting index-like returns, the dividends are covering the fees. It's a free hit. So, yeah, that's a benefit, which is why it scores an extra point on our checklist.
All right. Thank you. Horsies. This is something close to your heart.
It is. And I'm raising it for two reasons. One, we sold a horse for a good price last week. We had a colt out of a mare we own called Furic, and it sold for 450,000 against a reserve of 250,000. So it was a very, very bullish horse sale at the Magic Million. So we were happy. But I want to raise it now and put it in the category of predictions. But the last time, so the Magic Million set new records for highest priced horse sales this time round. Last time it happened was January 2008, when things were bullish and there was free money floating around and people were paying up for horses, and it didn't end well after that. So I'm hoping history won't repeat, but just to let people know, it's a frothy economy out there still, even though underlying it's not great.
Is that one of the legs of your stool that you always talk about?
It's not, but and again, like, I hate to make predictions, but it certainly caught my attention.
So it may indicate that there's way too much money floating around out there, and it's sort of peak frothiness at the moment.
It's going into risky assets. So you wouldn't say horses are anywhere near as good as quality companies on the share market.
Well, that one you just sold for twice what you wanted to get for it sounds like it was pretty good.
It was, yeah, and that's the classic survivor story, isn't it? Survivor bias.
Let's not talk about all the ones that ended up as
selling.
The ones that ended up as dog food. Let's not talk about those, but this one,
right. Yeah. So that's why I raise it. Just again, another for what it's worth. I'm not going to change what I do, but it's another harbinger of the top of the market, I think.
Right.
I wanted to just put a general call out to QAVvers for feedback on what sort of fees they think they're saving by doing it themselves. I know a lot of our listeners have come across from super funds, or have had money in managed funds, or have been using people to advise them on investing, through direct accounts or whatever. And we have had lots of good feedback from people saying that their returns are really good and they're getting better returns than what they were getting in the past. But I'm just interested to know, have people got experience in how much they've been saving in fees? Is it, nothing, 1%, 2%, 3%? Because there are still fees involved in doing it yourself. You've got to set up a lot of people will set up a super fund. They're paying a subscription to us and to Stock Doctor or whatever. I'd just be interested in knowing what the savings are on fees, because I think it's not as important as the returns, because the good returns trump everything, but it gets lost, I think, the fact that some people are out there paying 2, 3, 4, even 4% in fees. And if you think about the classic way fund managers charge fees, is they typically have 1 to 2% for their admin, and they'll charge 10% of outperformance, or even 20% of outperformance, which can add up to a high number, which they then take off your return. So I just thought it'd be good, just as a touchstone, to highlight the fact that even if you're, maybe not getting the returns you thought you would, you're perhaps saving on the other end from fees. So it'd be lovely if people could come in and tell us what they're saving on fees.
Okay. Well, if anyone wants to share that, you can shoot me an email, cr@qavpodcast.com.au, and I'll let Tony know.
Yeah, thanks.
Let's talk about confession season.
Yeah, we're into it. And I noticed today a number of retailers have come out with their unaudited results, and their sales and results are doing roughly 20% above the consensus forecast. And so they felt the need to come out during confession season, which, as we know, is the month before reporting season. And under ASX and ASIC, I guess, rules, they have to come out if they have a reason to believe that the consensus is misleading the market, and update people. So this could be a one-off because retail has had a good half, and it may not be the future in terms of their sales may come off again this half. Now interest rates have risen, but and certainly during COVID, retailers did well, and when people couldn't travel, the money was going into retail. So they may have had all their good times. But anyway, we're in confession season. Be alive to the fact that people are going to come out with interesting announcements, and they may affect our shares one way or the other. And so people should be ready and watching their share portfolio for the next couple of weeks to see if they need to make a change.
Apparently, George Pell kicked off confession season just before he passed last week. Confessed that he thought Pope Francis was a dipshit and running the Catholic Church in the wrong direction. And then conveniently went, well, let's not get into where he went. Wherever it is, it wasn't good enough, I think, or bad enough, or enough. But that's my personal opinion. Let's talk about lithium.
Yeah, mine too, I've got to say. It's and he's been through the courts. He was convicted, got off, spent time in jail. So there's it's pretty hard to run a court case on very, very old evidence. But what really annoys me with Pell is the Melbourne solution, and he was the person, for people who don't know, who thought it was a great idea if someone come and complained about a priest molesting their child, they just go to just lawyer up and stonewall it and try and starve the other person with fees. And it was just a terrible thing for a Christian to do, I think.
Well, for anybody to do.
Well, particularly for a Christian. No, you're right, for anyone, but particularly for someone professing those values.
Yeah, but look, you know, my take on the history of Christianity is replete with violence, oppression, racism, anti-Semitism. When people go, well, that's not very Christian, I go, actually, that's absolutely Christian, because Christianity has been raping and pillaging its way around the world for 1900 years. Well, a bit less, since Theodosius in 390 CE. And as I had to explain to a few people over the last few days, when the High Court reviewed the Pell decision, they didn't declare he was innocent. They didn't look at the evidence. All they said was, and this still blows my mind, is actually the jury shouldn't have been able to reach a conclusion based on the evidence it was presented with. They shouldn't have been able to reach a conclusion beyond reasonable doubt. They should have had some doubt, and therefore they nullified the jury's finding, and he was acquitted. But that's nowhere near the same thing as declaring he was innocent of the charges. They just put a question mark over the jury's conclusion, which in and of itself is quite extraordinary, I think, and doesn't happen very often. But I think it had something to do with the high-profile nature of the person involved in the case and all that kind of stuff,
and potentially of the persuasion of the High Court too. But I shouldn't say that. But
I don't know anything about the persuasion of the High Court. But yeah, it
was
neither. But very extraordinary event.
It does blast a hole through the system if you're going to be judged by a jury of your peers. and they're swayed by emotional evidence as well as they are physical evidence, and they find you guilty. And then the High Court comes along and says, well, actually,
Yeah.
if it had been a jury of lawyers, they would have let you off. It's like, well, what do we have here? A system of review by law or a system of review by peer?
Anywho, let's talk about lithium.